most people agree that the impact on the real economy has been disappointing and certainly less than what he mentioned, but the impact on financial assets has been quite considerable.
It has. It's created this wealth effect. In your best estimation, Mohamed, how much do you think the Fed easing has really added on to GDP?
So we would put the estimate somewhere between 1/4 percentage points to 0.5 percentage points. But the important thing, Betty, is what has it done to the rest of the world? So when we look at the Fed taper issue going forward, it's not just a question of when and what will they do, but also why and what are the implications. So the market now believes there's a likelihood, not a done deal, a likelihood they will start tapering in September.
Right.
It's probably going to be through a reduction in the Treasury purchases as opposed to the mortgage purchases. They're not going to be doing it because the economy has reached escape velocity, but they're going to be doing it because they're also worried about the costs and risks, the collateral damage. And finally, and we're seeing the collateral damage already, there is a global implication and the feedback loop that comes back into the U.S. from the disruptions in emerging markets. So this is quite a complex issue, and the market is trying to get its arms around it.
Well, Mohamed, it is a very complicated issue, and as you mentioned with Jackson Hole, there was quite a bit of discussion about what Fed tapering would do to global markets. And, you know, some of those central bankers in other countries are very worried, right, as they rightly should, Mohamed, that this could be very disruptive. Should the Fed take that into account when they think about tapering?
They should. I mean, the Fed stands behind the legal argument, which is a correct argument, the legal argument that it is mandated to worry about domestic objectives. However, our domestic economy is impacted by what's happening outside. So the warnings that we've been hearing from officials in emerging economies are playing out. Remember, they told us on the way in, all this capital that was being pushed out of the U.S. and into emerging markets was causing problems for them, causing pockets of financial excesses and leading to policy incoherence. Now it's the other way around. The capital is coming back into the U.S., and the result of that is very sharp depreciations in exchange rates, spikes in local rates. And if I am a company selling and getting my revenue from developing countries, I would be worried at this point.
Well, Mohamed, on that point, it sounds like you do agree with Harvey Golub, who warned of the same thing. He said, look, once we start to see tapering, that money is going to return to the United States, and you're going to see where asset bubbles have really been forming in other parts of the world. Where do you think it's going to hit the hardest?
So it depends what else happens, okay? And I'm going to give you an answer that you're not going to like, but it's a very differentiated answer. You know, countries differ in the amount of self-insurance, in the cushions they have to absorb shocks. So the most vulnerable countries out there are those, according to our emerging market desk, that have twin deficits, that have weak growth dynamics, and in addition, do not have much international reserves. You should worry about these countries. On the other hand, you should get excited about the opportunities that are going to get created by a generalized sell-off, because assets in places that do not have these vulnerabilities are going to be trading quite cheap and will offer long-term value.
At the same time, Mohamed, that we're talking about Fed tapering, in just about 6 weeks, we could be facing another fight over raising the debt ceiling. How disruptive is that going to be for the markets?
It would be disruptive if there isn't some change. So the positions are quite clear. You have the administration that says we will not negotiate over the debt ceiling, and the argument is very simple. Congress already approves the spending, so it shouldn't then make it very difficult to get the increase in the debt limit that's associated with the spending, because the spending has already been approved. And then on the other side, there are those who are willing to romance once again a big political fight. What I can tell you, Betty, is the economy cannot absorb a whole list of uncertainties, including another fight on the debt limit.
I know you sent me a list of 8 things that investors are going to be talking about or questioning themselves throughout the next few months when it comes to the markets. And I want to just bring up those 8 questions, because Fed obviously is on top of mind. You talk about the tapering, you talk about succession, who's going to succeed Ben Bernanke. At the bottom of your list, I noticed, was Syria and Egypt. And given what we've just seen overnight with the rising tensions in Syria, has that moved up your list?
So that list, Betty, is the output of a lot of discussion within PIMCO's investment committee. And they're not sequential in terms of what's most important and least important. They are regional. So you start in the US, then you go to Europe, then you go to Japan and the Middle East. So don't interpret them as most important to least important. Just interpret them that where we have. So the geopolitics absolutely important. You know, Syria is a tragedy. Not only is there tremendous human suffering, not only are there no easy options, as the administration knows, but in addition, as Tom Friedman of the New York Times always reminds us, Syria is a place where instability explodes regionally because it is now the place for a lot of proxy wars. And you see the reaction in the oil market this morning. Syria is not a big producer of oil.
No.
But when it starts involving regional effects, then the oil market gets nervous, and rightly so.
Well, that's a great point, Mohamed. If it boils over into the rest of the Middle East, that could provide a much more instability. If we see this shock, so to speak, Mohamed, is the economy here able to withstand that?
So the good news is there's been a lot of healing going on. Companies are in a pretty good place from a balance sheet perspective. The less good news is we don't have enough growth dynamics. So unfortunately, we do not see escape velocity anywhere in the near future. We see an economy that's stuck in second gear, growing by 1.5% to 2%. And right now, if that list plays out, and especially if it plays out simultaneously. So far, it's playing out sequentially, 1, 2, and 8.
Yeah.
But if it plays out simultaneously, then the balance of risk would be on the downside to our growth.
Right. It could certainly become a very big worry and a very big drag on growth here, and of course then on the asset markets. Mohamed, a couple of other things you mentioned on your list include what's going on in Europe. You said, where will Angela Merkel take Europe after her expected victory in the upcoming elections in the German parliament? How significant is that going to be for the markets?
It's really significant because we've had a summer of tranquility in Europe, and it's been very comforting. And that tranquility has come mainly because all the major decisions have been pushed back till after the German elections. No one wants to rock the boat in Germany. Germany is too important to the future of Europe, and Mrs. Merkel has provided quite a steady hand in guiding Germany and guiding Europe. So no one wants to disrupt what is likely to be a Merkel victory. So the result of that is we've postponed all sorts of things. At the regional level, have you noticed we haven't been talking about the 4 stools of European integration anymore? And at the domestic level, Greece, Portugal, and Cyprus in particular all need additional financing, and some need debt relief. So everything is being pushed back, waiting for the German elections. Once that is out of the way, we're going to have to look at whether Europe is able to make these difficult decisions.
I'm not sure investors can take any more negative headlines out from another part of the world, Mohamed. Back here in the U.S., just on the Fed, yes, succession, who's going to succeed Ben Bernanke is going to be top of mind. Has your mind changed as to who you think will be the next Fed chairman?
We follow this as closely as others. We don't have a view on either who should or who's likely. What we do know is the markets will react differently. So Mrs. Yellen is viewed as more towards the continuity end of the spectrum, and Mr. Summers is viewed less so.
Yes.
So we're just looking like everybody else. We don't have a view as to who will get appointed. What we do know is it's important to navigate through all these uncertainties. And Betty, it's not just bad news. I keep on stressing this. It is also good news because you get opportunities that come up. I mean, it's really important to remember that these sorts of dislocations create opportunities for both absolute returns and for incremental or alpha. So, you know, there's 2 sides of this thing. The important thing is to just keep on monitoring so that you can navigate your clients' resources through this.